The greatest way to learn about the stock market is through long-term exposure and lots of experience. And today I want to share with you some of the stories and some of the knowledge that I've gained through my time trading and investing on the stock market. How's it going, guys? Ryan here, and today I'm back to share with you some really good experiences that I've learned, some great lessons on the stock market during my time investing and trading. And these are things that are generally not picked up by newcomers and aren't really things that can be learned in your traditional sort of ways. These sort of lessons are generally picked up over time, and often they're more psychological than technical, so you can't really pick them. You can't just go to a stock, for instance, and look at their balance sheet and all the data's there. It's obvious information. These are more psychological market issues, as well as the way I interact with the market itself. These learning experiences have really improved me as a trader and investor in many different aspects, but mainly in knowing when and when I shouldn't buy stocks. So to kick it off, I want to talk to you about investment strategies and the importance of having one in place so that you can maximize your profits and minimize your losses. When I first started my investing career, I had absolutely no idea what I was doing. I had no investment strategy in place. I didn't know when I was going to buy a share. I didn't know when I was going to sell a share. And one of the biggest mistakes that I made was not educating myself prior to starting in the stock market. And one of the key things that I did, which I do not recommend you do, is to listen to your friends and people who generally have no exposure to the stock market or no success or experience on the stock market. I was extremely fortunate in that when I started investing in the market, it was in a bullish phase. And as a result, basically, no matter what you invested in, if you're investing in the right sectors, your stocks were going to increase in value. And that was basically a given. And it was more a matter of, when do I sell? When do I buy a stock? The fundamental issue here was I was just simply listening to my friends. I wasn't doing any of my own research. I didn't really understand what I was doing. I was just buying shares when I was told they were a good investment, and I was selling them sort of willy-nilly or when someone else told me to do it, not with any plan in place. As I said, given that the status of the market was bullish, I didn't lose too much money. I did lose money at times, but not significant amounts. The main thing that I actually lost out on was potential profit, and that was due to the fact that I was just buying and selling willy-nilly and without any sort of plan. I didn't have rolling stop losses in place, and as a result, it sort of became a point where, okay, the price of the shares hit 10 cents, I'm going to sell it now. This was also mixed with my inability to separate my emotions from my stock market trading. So as a result, there were some shares where I held onto them and they dropped more than 50%. Fortunately, I was still in a profit because I was in these shares early, but I still lost out on tens of thousands of dollars purely due to the fact that I kept holding the shares, and that's because I was emotionally invested in the story as opposed to looking at the facts, having a strategy in place and making sure that I maximize my profits and mitigate my losses. Understanding the necessity of having one of these investment plans or strategies in place prior to entering into a trade or an investment has absolutely changed the way that I think about investing and is a fundamental skill that you need to learn, and it's something that will develop and keep developing over time. The second lesson that I learned on the market is that stocks are incredibly unpredictable and the market overall is incredibly unpredictable. Just because everything on paper is going well for your stock does not necessarily mean the share price is going to increase. In fact, there are many situations where everything looks absolutely fantastic, but you'll see some good news come out and people sell the news and the stock price absolutely plummets. Furthermore, more often than not, you'll see your prices increase significantly of the share value or decrease significantly, but there's no real reason behind it. There's no logic behind it. It's just happening. There's no news. There's nothing driving this. The share price just fluctuates a lot compared to what you'd expect. If a company was going well and it's producing and all those sort of things are happening, you'd expect a slow and steady climb, or potentially not even much change in share price. But on some days you might see it drop a lot, and other days you might see it shoot up in price. The lesson here is you don't want to be caught off guard. So if your price of your share starts decreasing significantly and really quickly, you need to have something like the investment strategy we talked about previously in place to exit that stock to preserve your capital. Now, if we look at this from the other angle, where the price of a share increases sharply, you want to know that a dump is going to occur. The price has increased for absolutely no reason at all, 50, 100% for instance, and as a result there's more than likely a gap, and due to the fact that so many people would be on that share trading it, likely to be a sell-off due to the fact that people will start profit taking. Knowing when to get out in these situations can often be hard, and not let the emotions that come to play get the better of you, but you need to learn just to not be greedy. You need to learn that the small wins often do count, but the big wins are great unless you don't secure that profit. You need to make sure you sell those shares at a 50, 100% profit so it doesn't come crashing down. The third and final lesson that I've learned is following the hype is not necessarily a bad thing. In fact, following the hype can allow you to make quick trades which are extremely profitable if you're in the right place at the right time and you've got your trading strategy in place. One of the best things to do is to look at news articles, look at social media. What are people talking about? What's really interesting in the market at the time? You'll learn a lot from different people's perceptions of different sectors and different shares purely from reading lots of content. There's so much available to you. Twitter, Hot Copper, news articles, places even like the Motley Fool, which a lot of people follow. It's not necessarily the best content in the world, but a lot of people follow it, and as a result, if they mention a share or they mention a sector, lots of people will be looking at shares to buy in that area. What you really need to be careful with is not getting caught in the tail end of a pump and dump which has been driven by hype. More often than not, hype will see a large increase in value very quickly, but more often than not, it will crash in value quickly or even quicker than it went up. A great strategy you can use to make money both ways is to effectively buy the shares when they're going up and sell them where you sort of pick the peak or where you feel most comfortable getting out at, and then when the value of the share starts to decrease as a result of all the hype and the pump and dump occurring, you can short sell that. So you're making money on the way up and money on the way down. That's all for today, guys. Hope you enjoyed the video and the 3 key lessons that I've learned from my time on the stock market. I know they're not typical, but they're things that I've found really help me out. If you like the video, please give me a thumbs up and comment any questions down below you'd like me to answer. If you want to see more content, always remember to subscribe. And with that, have a good day. Catch you next time.